and good afternoon, everyone. Thank you for joining the ACT Developer Licensing webinar hosted by iCert from Equifax. The intention today is for us to get together and outline to industry how they can go about getting rated. We're just going to allow a couple of minutes and we'll start at 12:05 just to allow participants to come in, and then we'll get started. I can see a number of participants have joined, including a few from the ACT government. So thank you very much for coming in. We'll just allow a couple more minutes, ladies and gentlemen, and then we'll get started. We're nearly there. Just allow for a round number and we'll then get started. Brilliant. I've got the go ahead, so I'll get started. Once again, good afternoon, everyone. Joining us from Canberra, all over Australia. I've got a number of people attending this session today on our end, including Paul Nissen, Andrew Ferguson, and a number of team members that are working on this webinar in the background who you do not see. So thanking them to start with. Before we dive in, a few quick housekeeping notes. The webinar is being recorded, and we're doing that intentionally so that we can share it with anybody who was unable to make today's session. And a link will be sent to all registered attendees after the session. I would also like to start, or rather begin, by acknowledging the traditional custodians of the land on which we meet today. For us in Sydney, it is or rather I should say for us in North Sydney, it is the Cammeraygal people. And I pay my respects to their elders past and present, and extend that respect to all Aboriginal and Torres Strait Islander peoples joining us today. Over the course of the webinar, I would encourage you to ask questions throughout the presentation using the Q&A box, and we'll have dedicated segments to address your queries towards the end of the session today. So can we jump on to slide 3? So we'll quickly introduce our panel members. I've mentioned their names earlier. So we'll start with Paul Nissen, who is the Principal Product Manager at Equifax. Paul brings an extensive experience and knowledge from working within the financial services industry and as an experienced rating analyst. His expertise includes credit risk, predictive modeling, financial risk, and risk management. In his current role, Paul leads the iCert product team, leveraging his extensive background to lead the strategy and innovation for Equifax's independent credit ratings offering, including their utility in supporting public policy and the accessibility of insights to the community. Welcome, Paul. And joining him, we have Andrew Ferguson, Managing Director of Ferguson Brown Insurance Brokers. Andrew has been a participant in the building industry all his life in the areas of industry OHS, training and workplace relations. For the past 10 years, or rather, I should say, for the last 10 years, he was managing director of Australia's largest privately owned insurance brokering business before it sold to an industry giant named Steadfast. He has now established Ferguson Brown Insurance Brokers, FBIB, are specialists in insurance for development, construction, and property. In his spare time, Andrew tells me he is an elected councillor with the City of Canada Bay Council in Sydney. For those who haven't met me, and I'm hoping we've met most of you, or I have met most of you, my name is Yash Dillon. I lead the market development team for ISET, or the market development initiative for ISET. So at some point post this webinar, or over the course of you getting rated, we will definitely be having a chat. My team is the one that will be getting together with you, understanding your business, mapping you to reports that would suit your requirement. I have been with Equifax for the better part of a decade, going off script right now. And prior to Equifax, I was with one of the big four banks as an investment banker, and before which I was overseas in Dubai, heading up a media network. So we're incredibly fortunate to have all of you join us today, and are thankful to our speakers for their insights. And let's get started. So today's agenda. Here's what we'll be aiming to cover today. We'll begin with key takeaways from the Property Developers Act in ACT, including some of the key requirements that are being introduced. Then we'll introduce you to the ISET Independent Construction Industry Ratings Tool and explain how it relates to the ACT mandatory licensing requirements through an evaluation of a developer's capacity and capability to deliver high quality builds. Following that, we'll explore the significant benefits of ISET ratings for developers across, or I should say rather nationally. This is beyond the licensing requirements in the ACT and based on feedback from rated proponents across New South Wales, Victoria, and Queensland as well. We've seen a number of developers take up the solution, use it beyond legislative requirements, and that's helped them garner consumer confidence, foster buyer trust, and improve access to capital and insurance. Finally, we'll walk you through the steps to prepare for a rating assessment and highlight the importance of meeting the pre-legislative deadline, which is fast approaching. We'll conclude with a Q&A session and outline next steps. And to kick us off, I'd like to hand over to Paul to walk us through the latest on the Property Developers Act. Over to you, please, Paul.
Thanks, Yash. Okay, so I just need to add something briefly. So the content of this presentation is provided for information purposes only. It does not constitute legal advice and should not be used as such. Just an important disclaimer to add here. But good afternoon, everyone. The ACT Property Developers Act marks a significant shift in the landscape for the industry. Its core purpose is to elevate public confidence, ensuring that residential property developers in the ACT not only competent, but are capable and also fully accountable for the delivery of high quality builds. So while the enactment of the legislation places the ACT on the front foot, regulators nationally have grappled with how to best manage community concerns, most notably in New South Wales, with the establishment of the Office of the Building Commission in 2023. But also Queensland Developers Review Panel of 23 and the Victorian Building Legislation Amendment or Buyer Protections Bill of 25, which is set to introduce measures also which protect consumers from defective works. But as we focus on the Property Developers Act here, there are three key objectives. First being to ensure that property development is undertaken by competent and capable persons with the capacity to deliver their projects. Secondly, that developers retain responsibility and accountability for the quality of their dwellings. And thirdly, to promote an environment where the public are confident in the industry and the properties developed. So let's dive into some of the key changes. So firstly, the Act introduces mandatory developer licensing. This means that if you're undertaking or applying for development or building approvals for regulated residential building developments, that's typically 3 or more dwellings, you'll need to hold a license. This is a significant change that will impact many of you. This means that the Act rather, captures projects with more than 3 or more Class 1 dwellings and Class 2 residential building work. While there are elements of the Act already in force, today we'll focus on the elements around licensing for developers and specifically the application process. Applications open in October this year, with licensing being mandatory for any development approvals, building approvals, commencement notice, or occupancy certificates from October next year. Crucially, the Act mandates the submission of a rating report from an approved provider with your development licensing application. This is where a tool like iCert becomes incredibly relevant, and we'll explore this in much greater detail shortly. There are a few key definitions that are important to understand in the Act, as they will help guide you through the rating process and how to participate in an assessment. Generally speaking, the definitions of related corporations is aligned with related body corporates as defined under the Corporations Act, with one key difference being the threshold for ownership in a subsidiary being 25% versus 50%. Key persons are where we're going to focus today, as persons behind a corporate vehicle are critical in determining if they are in fact fit and proper persons to support the capability, conduct, and character of a developer. Goes without saying that office holders of a company, being the directors, company secretary, play a critical role, with their main responsibility to act in the best interests of the company and its shareholders, while ensuring the company operates legally and ethically. The next category is those persons with whom within the business who make or partake in making decisions that substantially affect the entity's business operations or economic standing. That would commonly mean executives who are running the operations or otherwise hold positions of delegated authority. And then those persons that ultimately hold economic interests in the business, 25% or more. And that can be direct shareholding or shareholding via another corporate vehicle. Where these individuals are not office holders, they are also able to exert influence over or through the directors that act in their interests. And lastly, definition is quite broad, but effectively captures those that are directing the operations of an organization, as any person who gives or instructs an officer or generally acts or would otherwise give cause for a reasonable person to believe that they control the business. Okay. So now we've covered which businesses will need to be licensed and the scope of key persons to be reviewed. We'll explore iCert. So iCert is an acronym, the Independent Construction Industry Rating Tool. It is an independent evidence-based rating framework that provides a star rating from 0 to 5 stars. The methodologies applied have been developed through extensive consultation with government, industry, consumer groups, ensuring it reflects a comprehensive view of what constitutes high quality and reliable building professionals. iCert is provided by Equifax Australasia Credit Ratings, a licensed credit ratings agency that is governed by ASIC and is held to the IOSCO Code of Conduct for ratings agencies. This effectively requires that we're operating in a manner that protects the market through fair, efficient, and transparent processes to maintain the integrity of the rating process, our independence and the avoidance of conflicts of interest, appropriate governance, risk management, and suitably qualified staff engaged. Importantly, the confidentiality of the information provided through to us, as well as fair and non-discriminate disclosure of ratings actions. As I noted previously, the approach to market and the methodology was developed through extensive consultation with government and industry, as well as consumer groups, ensuring it reflects a comprehensive view of what constitutes high quality. The objective of iCert ratings is the restoration of trust and confidence in the construction and development industry, enabling consumers to make informed decisions by providing transparency to the good and the not so good operators in the industry. While many stakeholders have vested interests, few had the same level of opacity of information when it came to evaluating risk as did a consumer. To that end, it was important that consumers be able to easily access a central trusted repository of ratings. At the same time, iCert was not designed to simply discriminate trustworthy from high risk, but to uplift the industry, its capability, by taking an independent and objective measure of the sector, highlighting where opportunities exist to buttress processes or implement new, more effective controls to manage risk. Lastly, while iCert was initially launched in New South Wales for Class 2 developers, it was always developed as a multi-jurisdictional and multidisciplinary lens to it. So how does iCert arrive at a star rating? It's a rigorous, data-driven process. iCert leverages thousands of data points from both public and private sources to ascertain the reliability of a building professional. This includes, but is not limited to, project performance, building defect history, insurance claims, license and regulatory compliance checks, trading partner relationships, payment performance, credit records, and financial data. This extensive data undergoes thorough analysis, scoring, and weighting. The resulting star rating reflects the likelihood that a developer has the capability and willingness to honour their commitments related to the design, development, and delivery of residential buildings. A rating of 3 stars or above signifies a business as trustworthy, one that upholds its commitments and addresses problems proactively. It's about providing clear, at a glance indication of your business's overall reliability and trustworthiness, and the level of risk for clients and stakeholders. The assessment criteria themselves are divided into 6 groups, starting with character. Here, we're looking at key persons of the business, their background, the number and tenure of office holders, the commercial risk profile of those office holders, as well as the commercial risk profile of shareholders and beneficial owners, as well as the risk profile and any adverse information on related companies. Then we look at capability, the business's tenure and track record, its record with regulatory agencies, experience and past projects, the ability to obtain requisite insurances, and the history of any major claims, as well as the operating maturity and governance processes in the business. As we look at conduct, we're looking at trade and payment performance, court judgments and defaults, compliance with statutory obligations such as tax and superannuation, and regulatory undertakings or interventions, as well as any past poor conduct of related entities. As we move into capacity, here we're considering the operations of the business, the sustainability of those, and the adequate level of profitability to sustain them, as well as liquidity and working capital, operating and net cash flows, and the sufficiency of a pipeline of work and the business's ability to meet financial commitments. As we move into capital, again, relating to the financial profile, but focused on the funding. Consideration is given to the level of equity, the extent to which the entity is capitalized, the extent to which earnings are retained or distributed, funding facilities and headroom under those facilities, borrowing capacity and ability to service, as well as the extent to which guarantees or encumbrances might exist against the entity's assets. And lastly, counterparties. We appreciate that entities often operate under group structures. However, it's important that the extent to which the entity supports or is supported dependent upon other entities is factored, as well as balance sheet exposure, or support provided through guarantees or loans. We're also looking at commercial risk profiles of related companies, the extent to which an entity manages its exposures to third parties, as well as the risk profile of key trading partners and independence from any conflicts of interest. There's a lot in there, right? But easily translated into a star rating outcome. As you might appreciate from those factors, there is a fair amount of transparency and cooperation between iCIRT and your organisation. We understand that isn't for everyone, so there are 2 levels of rating service available, each with its own benefits and considerations. The standard assessment provides a silver star rating of up to 4 stars, which can be used to share with regulators and business-to-business transactions. It includes many of the criteria attributes, but not all, so its outcome is restricted and not freely marketable to consumers. The detailed assessment, on the other hand, covers the full scope of criteria and provides the greatest level of transparency to support trust. As a result, the rating outcome extends to 5 gold stars. Organisations that achieve a rating of 3 or more stars are termed trustworthy constructors and are included in the iCIRT registry. With this level of transparency, organisations are able to market this achievement for a year following their assessment, after which a review is required to remain on the iCIRT register. But while mandatory for licensing, an iCIRT rating offers significant strategic advantages which extend far beyond mere compliance. Firstly and crucially, it builds buyer trust and confidence. In an industry that has faced scrutiny regarding building quality and defects, an independent iCIRT rating provides powerful third-party validation of your commitment to quality and reliability. It gives prospective buyers the peace of mind they need, setting you apart from competitors and enhancing your market reputation. We've seen in other jurisdictions that buyers are actively seeking out iCIRT-rated developers, and some are even shying away from those who are unrated or have low ratings. In a recent consumer survey, it was revealed that 90% of Australians agree that a register of independent rated trustworthy constructors is needed. But more importantly, more than half are willing to pay more to purchase from a rated developer. Secondly, an iCIRT rating can lead to faster access to capital. Financiers are increasingly incorporating iCIRT ratings into their decision-making processes. A strong iCIRT rating signals reduced risk, making your projects more attractive to lenders. This can translate into streamlined due diligence, faster approvals, and potentially more favorable lending terms, ultimately accelerating your project timelines and improving your financial agility. In Stanford Capital's debt market survey from earlier this year, 49% of lenders incorporated iCIRT into their process already, and a further 10% plan to do so in the next year. Of these lenders, 40% had turned down finance to an applicant due to poor or non-existent iCIRT ratings.
Thank you, Paul. Appreciate that. Look, I think it's important that we echo some of the points because often they can get missed when we cite data and statistics. A couple of points I'd like to echo is consumer sentiment. We know for a fact iCIRT's been in commercial existence for the better part of 3 years. Over the past 3 years, we've done surveys year on year. And as Paul alluded to, consumers are now more aware of iCIRT. In saying so, they're willing to pay developers upwards of 8% more if there's a trustworthy badge associated to a developer. And why we make this comment or this point today is we'd like to ask you to look at this beyond legislative requirements. Whilst it is very important that you look at it from a legislative standpoint, it is equally important that you consider the benefits that come with getting rated. And to speak to the benefits and how we're building consumer awareness, I think it's also important to highlight the work that our marketing team is doing. And it's phenomenal work, be that through realestate.com, be that through Channel 9 or mainstream channels or media streams, be that through GDN, be that through Meta. So there's a lot of consumer awareness being built, which drives traffic to our public-facing register, which houses 195 rated and published proponents on there. So at any given point, all that traffic is going to a central point, and they're downloading the home buyer's guide, sense checking a developer whether they're rated or not. We've spoken about the financial benefits. We've spoken about consumer awareness. We've spoken about the legislative requirement. I would argue that's the first point you should consider. But then equally, you've got to also consider the intangible benefit that comes with being ICERT rated, or rated for that matter. It gives a consumer, being a migrant to this country, for someone like me, it gives me a lot of comfort in knowing that a third-party company calls out and says that you are, in fact, who you are. You will stand behind your projects. You're a trustworthy business to transact with. To that end, one last point I will call out because it's worth celebrating. We have completed, rated, and published our first ACT player, Village. They have gone through the process, and it's worth calling them out. And we are talking to a number of your peers. So it would be prudent that you jump on this immediately, given the runway on this is from October this year to October 2026. But there's a lot that's got to be done between now and then. Thank you, Paul. Great insights. As we talk to the value and build up on the value even further, from the insurance segment, we invited Andrew Ferguson to come in and speak to demonstrate, or be able to demonstrate, your company's capacity, capability, and character. So to that end, I will pass the virtual mic to Andrew to share how insurers are looking at risk and the products coming to market, including the application of ICERT within the insurance space. Over to you, please, Andrew.
Well, thanks very much, Yash, and ICERT Equifax for organising the webinar. And I, in particular, want to congratulate the ACTU government for introducing developer licensing. It's long overdue, and it's fundamental for the protection of consumers, be they investors or home buyers. In terms of insurance, Ferguson Brown specialises in development construction insurance. We are insuring some of the largest residential projects in Sydney, and we welcome the work of Equifax and ICERT in making their contribution to making it a better industry. There is some growing evidence that insurers are taking note of the very significant developments taking place across Australia and now in the ACT, in terms of better regulation and third-party accreditation of developers and builders. I'll give you one very specific example. That's in the area of latent defects insurance. That's insurance that provides a 10-year guarantee for consumers for purchases of units against structural defects for 10 years. And the first insurer to provide that in Australia is Resilience, and they are specifically giving a premium benefit to companies that have got ICERT accreditation. So it's a very significant development, and we think as new players enter the defects market, there will be more insurers doing exactly the same thing. In terms of Contract Works, and Contract Works is the principal insurance required by a developer builder or a builder standalone. There's no specific discount that's provided, but a quality insurance broker, when they're presenting a proposal to the 10 insurers that specialise in Contract Works, we provide a narrative. We explain who the client is. We provide details of their CV, their track record of developments, and one of the things that we highlight is ICERT accreditation. That's part of the narrative. We certainly provide all the information about the technical build, the complexity of the build, but that narrative is important for the insurer. And when we're dealing with the key insurers at a very senior level, we want to ensure that we provide the best possible presentation for a client, but we're also interested in the response for the insurer. If we don't present good quality applicants, we suffer the consequences of having less influence and credibility with insurers. So we certainly highlight ICERT accreditation in that whole process. And I think increasingly insurers for contract works in particular are going to note these sorts of factors, and specifically ICERT accreditation. But yes, I do want to take the opportunity also to raise a broad issue, which I want to raise with developers in the ACT and more broadly. Most developers who are not developer builders, and they sublet out the contract to a builder, they often have the builder taking out the contract works. But there is an opportunity, in fact, for the developer to take out contract works, and we present the case of the development company if they've got ICERT accreditation. If they don't have a claims history, and there's many developers that don't have a claims history in the area of construction, we can get very good pricing, and that's called principal controlled insurance. We have a growing number of developers in Sydney that are in fact arranging for their builder not to take out contract works and the developer to take it out. And that's a very good risk mitigation strategy, particularly with the very large number of insolvencies that take place in construction. And tragically, there's been some unfortunate high profile insolvencies in Canberra itself. So I raise that issue as a broad issue, but I certainly endorse ICERT accreditation, and we believe it'll be helpful now and increasingly so in the future in getting some better pricing for developer builders. Thanks very much, Yash.
Thank you, Andrew. Appreciate that background and the preamble. Just speaking to the benefits further, just keeping in light with that theme. We've spoken about LDI because that was mentioned. It's worth noting that the new entrants in the market, the Australian market, have in fact, there are good signs in them considering ICERT as part of their underwriting process. In fact, incentivizing businesses, as Andrew mentioned, Resilience already does, incentivizing businesses on being rated, and not just that, in fact, incentivizing based on the outcome, which is even better. So again, keeping with the theme of look beyond legislation and see the value that a rating offers you, I would implore that you kindly consider that. And if you have any further questions, particularly about principal controlled insurance, I've learned a thing or two today. I would definitely ask you to get in touch with Andrew. He's been a strong advocate in the industry, and he's one of the people I would recommend to my mother. All right. So we move on. Let's talk about how you prepare for your ICERT rating. Now, I've been in upwards of 600 meetings, and often the comment comes around that it is a daunting process. We appreciate that. We've spoken about two different assessments, one being the standard assessment, the other being the detailed assessment. The standard assessment all up requires 6 man-hours for you to be able to collate data, share it with our team to carry out the assessment. The detailed assessment takes about 12 man-hours for you to collate data and send that back to us. Now, to enable you and set you up for success, here's what we are proposing. Anyone who's interested can jump onto the register. At the end, we'll have a QR code. You can scan that, leave your details. Someone on our team, Paul and my team, will reach out to you, schedule a one-on-one session where we'll map you to the appropriate report. We'll also then give you an overview, a breakdown of the product and the process, further speak to the value of ICERT as well. Once we've gone through that and we've extended a proposal out to you, and you're ready to move ahead, we will get you to sign an engagement letter. After that's been signed, the team issues out an invoice. You've got 30 days to pay that invoice. Once that's paid, our team starts work. And between step 6 to step 10 in a detailed assessment, or rather I should say in a detailed assessment, if we just stick with that construct for a moment, in the detailed assessment, once the background checks have been initiated, we go through what we call a management interview. Now that's where you start collaborating with us. Now it's very important that I clearly call out, this is a collaborative effort. We're not in the business of looking for unicorns. We're in the business of working with businesses to understand And if there are anomalies, we want to understand what those anomalies were, how you've mitigated against future anomalies. So we're looking to work with you. So that's where the team will sit down with you in a management interview. And between step 6 to step 10, you continuously share data. So there's transparency and full disclosure, back and forth. And at step 10, regardless of the stream you choose, whether it's standard or detailed, this is how collaborative and transparent the process is. We'll extend you a courtesy of sharing a draft report with you, during which we'll invite you to review and clarify any errors of facts. Now that's pretty powerful. If you think about that for a moment, we're not sitting somewhere and assessing you. We've been assessing the industry for the better part of 60 years. For those who don't know, Equifax has been in commercial existence for the better part of 160 years. 60 years under the EACR corporate scorecard banner. We've just been assessing the construction industry, upwards of 800 assessments a month. Whilst we're following a similar process, we're actually working with you to understand your business and support you. Once we've corrected any errors of facts, and depending on the stream that you've chosen, be it the detailed or the standard assessment, we will then either publish, so you'll join the 195 rated and published players, or you will have a private distribution page. As Paul mentioned, you can share that in a private setting. So that's what the process looks like. End to end, depending on the report type that you choose, it can be 4 weeks for a standard assessment, because we do background checks on individuals and key persons, or it could be at the most 8 weeks end to end. But at your end, it's anywhere between 6 hours to 12 hours, 12 man hours for you to be able to deliver on the data. And at the end of our overview, we will actually share a sample of the RFI with you, so you know exactly what you're committing to even before you get started. So what does good look like as part of that process? If I can just stay on this slide for a second, rather the next one. In terms of speaking to how you prepare for your ISET assessment, while the process may seem daunting, as I've mentioned earlier, I do want to again reinforce the point that Paul, I, and the team are here to work with you, to understand and support you. What we're looking for is transparency and full disclosure. In saying so, the willingness to be open and readily provide all requested information, which is paramount. This includes consenting to comprehensive background checks, being transparent about your business affairs and past performance. Again, we're not looking for unicorns. We're looking to understand if there were anomalies, if there were issues, how did you remediate? What checks and balances do you have in place for any future challenges? We're looking at perhaps strong management team, demonstrate to us the roles and responsibilities, and making sure that you've clearly delegated across various individuals, ensuring business success isn't reliant on any one key person. So what we're trying to identify is key person risk. Showcase the team's capability and collective leadership is also something that we'd be looking at. Experience of key personnel, and this is where I think ISET adds a lot of value, because we're not just looking at age of business, we're also looking at the age, respectfully, of the individuals in the business in terms of experience. And it pays dividends. So details, projects each key person has managed, that'll feed into the positive element of the ISET rating. Their specific roles, responsibilities, involvement, duration, documented history allows the team to verify their track record, noting any prohibitions, rectifications, or adverse findings. And then you've got robust systems and processes. What we're looking for is having clear evidence of your quality control, risk management, governance frameworks, and how do you ensure projects are delivered to a high standard? And from a financial health standpoint, as Paul mentioned, we're not just looking at historically, we're looking at point in time and forward looking as well. In saying so, you need to provide a clear and stable financial record that demonstrates the capacity and capital to undertake projects. So if you're telling us this is your workbook or your order book, do you have enough funding covenants to support that? Financially, are you sound to be able to support that? And often the case with developers will happen is that you'll have an SPV in play, and then you'll have a related party support. This is what we call a parent entity, related party support. So we'd be looking to assess both of them, so they can both sort of feed off each other and their strengths. From a compliance history standpoint, a clear and clean record of regulatory compliance and absence of any adverse findings are crucial. I will pass to Paul again now. Thank you.
Come off mute. There we go. Look, just in terms of preparing here, a practical roadmap to get ready for your assessment. So just understanding the requirements by familiarising yourself with the Property Developers Act and how iCert ratings fit into that. Knowledge is power. As a second step, just going through a bit of an internal review. Conduct an honest review of your business against the criteria. Where are your strengths? What are some of the areas that might need to be bolstered? And this could involve reviewing past project performance, the financials, internal governance, etc. Then gathering together your documentation, begin compiling all those relevant proof points, and then reaching out to us once you feel prepared, contacting us to initiate the assessment process. And as Yash mentioned, I'm happy to start that conversation sooner if it helps guide you in your preparation activities as well. And then lastly, really addressing any gaps if they exist. So through your assessment there, there may be some areas of improvement identified, and this will enable you to take some proactive steps to address them. It could be upskilling staff, improving financial transparency, etc. It's all there to support you ahead of that pre-legislative deadline when the licensing under the scheme opens in October this year and becomes mandatory the following year. But really, the message here is don't wait until the last minute. Early preparation is key. And acknowledging the time, I will move now to the final slide of Q&A here. So if our administrators have any questions from the audience, or Yash, if you wanted to close us there first.
I think I'm going to get a T-shirt at some point that says that you're on mute.
You're on mute.
Nonetheless, look, thank you very much, Paul. Thank you, Andrew. Appreciate the update. Appreciate you coming in today, supporting us in getting the message out there. And also, I do want to acknowledge the government coming along and being part or sitting in as well as participants, and everyone that's joined us. Now, I've got a question from Christine Murray, and we'll speak to that in a moment. But before we get there, I do have a few other questions as well that we can address, and we'll go in that order. Again, thank you to the entire team, and yeah, we look forward to working with you, and we look forward to supporting you through the process. We'll start with Christine's question, Christine Murray's question. What finances require iCert? I do a great deal of project finance work, and I'm not aware of any Australian banks or large private lenders that I have encountered that have required iCert. You mentioned 40%, which seems very high. Paul, did you want to take that, or would you like me to support that?
Well, I can answer in two parts, and you can probably add to it as well, Yash. But that's not our research. That's off of Stanford Capital Market Research. So I don't have all the lenders that they're in there, but there is a mix of the tier ones as well as the private credit and the other financiers involved. I know of the Big Four asking for the iCert ratings of their potential business borrowers as well. I can probably freely name them, can't we?
Yeah, no. So there are a few that have now, and I can tell you anecdotally, sitting in meetings. So we've got the survey that speaks to specifics of the fact that 49% of the finance sector is already using iCert, right? But then equally, when we're sitting with these developers one-on-one, Paul and I, we're being told NAB or Macquarie or perhaps for that matters Qualitas, or there are a number of businesses that are being named that require them to be rated as part of the iCert process. So Christine, I hope that answers your question. I think it always comes down to the risk portfolio, and who you're dealing with at the bank. Have they in a way mandated it? Well, that's a discussion that we're having. But at this point, the more risk-averse analysts and bankers are now asking for that question. I hope that answers Christine's question. Vernalyn, I hope I'm pronouncing your name correctly, Kuba Rubia asks, what building structure standards do you look into in your assessment?
Sorry, I missed that. Can you just go again, Yash?
So what building structure standards do you look at in your assessments is what I'm guessing Bernal is asking.
Yeah. So to clarify here, we're not a construction expert. We're looking at your processes and controls to ensure that you are complying with your required standards. And when you are failing to do so, where there are records of regulatory intervention or consumer harm off the back of failing to do so. Yep. So I'm not going to go deep on a project and say that you've misinterpreted a standard. I'm going to look at your process to ensure that you're able to comply with your standards and the checks and balances that you have in place in that respect. I hope that helps sort of address where we're going here. We're not, a side audit of your projects. We're a review of your business processes and controls.
Thank you, Paul. Look, we're at time. In fact, we've gone over, and I see everyone's still here. So thank you so much, ladies and gentlemen. I would encourage you to send through your questions, scan the QR code, send us your questions. We'll be happy to answer them, take them one-on-one, take them offline with you, and support you. In closing, if there are any further sorry, I should say there's a survey at the end of this webinar. I would please ask that you support us in leaving your feedback, which is extremely valuable. The marketing team tells me that, and yeah, I'll be slapped on the wrist if you don't do so. So thank you very much. Appreciate everyone coming out. Andrew, Paul, and all the participants. Appreciate you all. Appreciate the marketing team. And there's a lady behind the scenes named Kate, who also looks after product for ISET, so she's here in the room as well. So thank you, everyone. Appreciate you all coming out. Have a lovely day.
Thank you all.